mistake that I see in QuickBooks is when money comes back to the business, oftentimes owners don't know what to do with that money. And again, they kind of want to dump it into income. But when you make a return, it's not income to the business. It's not money that your business produced. It actually belongs in whatever category it came from. So examples would be you paid your insurance and you canceled to move to another insurance, and that insurance company gave you back some money. You get that money back. It's not income. It actually belongs back in insurance. So here in this dummy data, we actually have a great example right here where we see that money was spent, $1,200 was spent, and $200 was received. So let's assume for this purpose that the money was spent and that a refund was given of $200. Maybe they returned the equipment early, or there was a part they didn't need, or whatever happened, money came back to the business from this vendor. So what we will do here is we will go ahead and categorize the expense. So this expense, this says that it's A1 rental. So we always want to make sure that we have a customer vendor, and A1 rental is not a vendor now, so we will make one. Again, you don't want to leave that blank, because when you're going through your books, you want to be able to look at who you paid money to. And especially if you're going to be paying money to people, if you don't put that vendor customer name in, you're not going to have a way of knowing who paid you and who you paid and how much to. So make sure to keep that accurate. Sorry, and another little side note. And then here we are going to pick what this was for. So we are going to type in rental and see what comes up here. This is equipment rental. So we'll say that this was equipment rental. It was an expense, and we'll hit add. Now, when we go here to this $200 received, it needs to go in the same category with the same vendor. So if this was an Amazon return, you would pick the vendor as Amazon. You'd put it right back in the category where it came from, office supplies or marketing material. So here we're going to say A1 rental, and then we are going to, it pooled equipment rental. So QuickBooks knew that that's what to expect, but you want to make sure that that's right. Don't let QuickBooks just guess, and go ahead and hit add. Now, when you go on your profit and loss sheet, there's going to be a $1,200 expense and a $200 credit on that account. So if these were the only two things in the equipment rental, you would see $1,000 in equipment rental, and that would be correct. So make sure if money is coming back into your business for a return, that you're putting it in the category that it came from.